Hey everyone, welcome back to the channel. Today, I want to talk about something I've read a lot about recently online and seen a lot of videos on YouTube about, and that's about the stock market crashing in 2022. Now, I'm not here to tell you if the market's going to crash or if the market's not going to crash next year. I don't know the answer to that, and most people writing those articles don't know the answer either. And if they did, they sure as heck wouldn't be telling us. But what I'm here to tell you rather is why we shouldn't care about what's going to happen in the stock market in 2022. And I think there's a company, Alibaba, that we could talk about here, and I think it's a really good example of kind of two mindsets that we see in investors. So if we go back to about April of this year, Charlie Munger, it was released in a 13F filing through his investment company that they took a stake in Alibaba. At that point in time, the stock went from about $300 down to about $230 a share. So it was down, a pretty significant amount, pretty big pullback. And a lot of our online chatter started to happen about how this was a great kind of investment play. The value guys are getting into it, and this is something that you should potentially look into. And I think at that point we saw a lot of retail investors start to pile into this company. And now over the next 6 months, if you've been following Baba, you've seen the stock went from 230 down to, I think it was like 115 yesterday, 110 maybe. It's up to like 120 now. So it's lost about half its value since Charlie Munger took his first position in this company. And now the sentiment online, if you Google Alibaba, I think like the top 10 results on Google, if you type in Munger, Baba, it's like Charlie Munger, no idea what he's doing, horrible play, not a great value investment, and a lot of stuff around that. So I think the sentiment has changed from it being a good value play to this awful thing, because in the short term, in the last 6 months, it has gone down 50%. And, I think if we dissect this, right, there's kind of two positions here. You have the Charlie Munger, the value investor, the person who's done their due diligence. They have a price target for the company, right? He has a true intrinsic value of what he thinks the company is worth. And in the last 6 months, he hasn't changed his position on that. After their most recent filings, all of that, he still believes it's worth this. And the way we know this is since April, he's actually increased his position 80% in Alibaba. So I recommend, if you haven't already, any positions you hold, make sure you understand that company, fundamentally what's going on with it, understand the management, understand any moats they have, how the business works, and what really drives value for this company. That way, if there is a short-term price fluctuation, you can understand, is this just a broader market noise, or is this something I truly need to be concerned about? And now the other investor, which unfortunately I think is a lot of us as retail investors, we go on Seeking Alpha, we go on StockTwits, we go on Twitter, we go on Reddit, and we see what the consensus is on where we should be putting our money. And I think a lot of people got into Alibaba around that same time after reading that Charlie Munger was in it. And now it's gone down 50% and you're angry, you're mad, you're upset. So you exit your position irrationally and you sell at the bottom. And, I think from that standpoint, why did you sell? Well, why did you buy, right? You never really had a clear indication of why you were getting into the stock or why you were getting out of the stock. And I think that that's a problem for a lot of people, especially as you're a newer investor. You're not doing the research you should be, and you don't know why you're actually entering a position or not entering a position. You're just kind of following what you read online, and you're hoping for the best. And I think if that's the bucket you fall in, you should probably shift more towards ETFs, honestly. It's a broader diversification, and you're not putting such a concentrated bet into one asset that can actually fluctuate pretty significantly on a day-on-day basis. Now, right, let's take a step back here and just kind of think holistically, looking at 2022. A lot of things are going to go up, a lot of things are going to go down. But I think, that panic selling at the bottom and then buying at the top, or saying I'm going to wait until the market crashes to buy in. Sometimes the market never crashes. I think you have to ignore the headlines and you have to come up with your own investment ideas and your own thesis and make sure that the companies you're investing in, you're comfortable with, because you're not investing in the short term. When you pull together a DCF, that's a 10-year outlook on the company that you're projecting. And if in 6 months you're like, oh no, I got to sell, but nothing's fundamentally changed about the company, I think you're entering the stock with kind of the wrong intentions as an investor. So just something to keep in mind. From my perspective, I kind of reevaluate annually on my stocks. I look at my portfolio and I see what's in there and understand, do I still like the business model? Do I still like the company? And I try to ignore the short-term movements. Honestly, I don't really check the stock market all that often. I'll look at it probably once or twice a week, but I'm not sitting there signing into all my accounts, checking them. I'm just kind of probably looking at how's the S&P doing? Are there any big moves or gains? Just to kind of keep up to date with what's going on. But I'm not sitting there, waiting for an earnings call and then seeing how the stock reacts to make a decision. I do a lot more of a kind of a deeper dive into an individual stock and read the 10Ks, read the 10Qs, listen to earning calls, see how things have trended, and then kind of set a price target for myself where I would be comfortable entering. And if the stock happens to get there, I'll think about entering a position. But it's not something I'm constantly reevaluating and redoing. But anyways, I hope you found this useful. Thanks for watching. Take care, and let me know if you have any questions below. Thanks.